Investing can be a wild ride, with the ups and downs of the stock market sometimes feeling overwhelming. But what if I told you there's a way to add stability to your portfolio while building a steady income stream? Real estate could be the answer. Now, I know what you're thinking. Real estate requires a ton of money to get started, right? Well, that's not the case with REITs, real estate investment trusts. Today, we'll explore 5 of the best dividend paying REITs that can set you up for long term financial independence. Imagine building a passive income stream that helps cover your expenses or even replaces your job one day. Let's get into it. What are REITs and why choose them? Let's break down what REITs are and why they're a smart choice for many investors. A real estate investment trust, or REIT, is a company that owns, operates, or finances income generating real estate, like office buildings, shopping malls, apartments, and even data centers. What's great about REITs is that they're legally required to pay out at least 90% of their taxable income to shareholders as dividends. So when you invest in a REIT, you're investing in real estate without having to buy, manage, or finance any property yourself. Plus, REITs make it easy to diversify because your money is spread across many properties, protecting you from the risk of any single property underperforming. REIT number 1, Realty Income, O. Let's start with Realty Income, ticker symbol O, which has even earned the nickname the Monthly Dividend Company. And yes, you heard that right. Realty Income pays dividends every month, not every quarter like most stocks. They're focused on properties leased to well-established retail and commercial clients like Walgreens, FedEx, and 7-Eleven. By focusing on top quality tenants with long-term leases, Realty Income aims for stability and predictable income streams. This REIT has a dividend yield of about 4.3%, which is higher than the S&P 500 average. Let's put some numbers to it. Say you invest $10,000 in Realty Income today. With a 4.3% dividend yield, you'd earn about $430 per year, or roughly $36 per month. Now imagine reinvesting those dividends. Over 10 years, that $10,000 could grow to over $15,000 with dividends reinvested, and over 20 years, your investment could double or even triple. The power of compounding really kicks in here, especially when combined with Realty Income's reliable monthly dividends. Pro tip: monthly dividends make Realty Income an attractive option for anyone looking to build a regular income stream, whether you're in retirement or just building a passive income portfolio. REIT number 2, Vanguard Real Estate ETF, VinQ. Next on our list is Vanguard's Real Estate ETF, ticker symbol VNQ. Now, this isn't a traditional REIT, but an ETF that invests in a broad range of REITs across various sectors. VNQ is a fantastic option if you want exposure to real estate without having to pick individual stocks. When you buy VNQ, you're essentially investing in a mix of residential, retail, office, and industrial properties. This diversification helps balance the risks associated with any single type of property. With a yield around 4%, VNQ provides a steady dividend while allowing you to benefit from the growth in multiple real estate sectors. Let's take a look at what $10,000 invested in VNQ could mean over time. A 4% yield gives you $400 in dividends annually. However, because VNQ holds some high-growth REITs, your overall investment can grow faster as well. Say VNQ grows at an average rate of 6% per year. Your $10,000 could grow to around $18,000 over 10 years with reinvested dividends. VNQ is perfect if you want to set it and forget it with broad real estate exposure. REIT number 3, Digital Realty Trust, DLR. Coming in at number 3 is Digital Realty, or DLR. This REIT is a bit different because it specializes in data centers, which are essentially the backbone of our digital world. Think about the amount of data we produce daily through online shopping, streaming, and cloud computing. Digital Realty provides the physical space for tech giants like IBM, Facebook and Amazon to store and process all that data. With a yield around 3.5% and a history of dividend growth, DLR is a great option if you're looking for a tech-forward REIT. Imagine you invest $10,000 in digital realty. With that 3.5% yield, you'd make about $350 in annual dividends. But here's the interesting part. Data centers have strong growth potential. If digital realty's stock price grows 10% per year on top of those dividends, your $10,000 could double in value in just about 7 years. This makes DLR attractive for those who want both growth and income potential. Fun fact, data centers, REITs like digital realty have become essential as the demand for data storage and cloud services continues to grow, making this a long-term growth play with consistent income. REIT number 4, American Tower, AMT. Now, American Tower, ticker symbol AMT, is another infrastructure REIT, but its focus is on telecommunications. It owns and operates cell towers globally, supporting the infrastructure we rely on for mobile communication and internet services. With the global expansion of 5G, demand for these towers is expected to grow, making American Tower a solid choice for future growth. AMT currently offers a dividend yield of around 2.3%, which might seem low, but its growth rate has been around 20% annually, which is incredible for a REIT. If you put $10,000 into AMT, your annual dividends would be about $230. But because American Tower's stock price has a history of strong appreciation, you could see your investment grow significantly over time. In 10 years, that $10,000 could grow to over $25,000 if the current trends hold. AMT is perfect if you're looking for exposure to both growth in digital infrastructure and a consistent growing dividend. REIT number 5, Extra Space Storage, EXR. Last but not least, we have Extra Space Storage, or EXR, which is a leader in the self-storage sector. People always need storage, whether it's due to moving, downsizing, or simply accumulating too much stuff. The self-storage industry has proven resilient, even during economic downturns, which makes EXR a reliable choice for income-focused investors. It currently has a dividend yield of about 3.2% and strong growth in its dividend payout. Let's say you invest $10,000 in Extra Space Storage. With a 3.2% yield, that's $320 in dividends annually. But when you factor in EXR's price appreciation over the years, your $10,000 could potentially grow to $22,000 or more over 20 years. Self-storage. REITs like EXR offer a combination of income and growth that's hard to beat, and their resilience in downturns makes them a staple for many portfolios. So, there you have it. 5 top REITs that provide both income and long-term growth, making them fantastic options for building a stable portfolio and moving closer to financial independence. Whether you want consistent monthly dividends or long-term growth in niche sectors, there's a REIT for you on this list. Which one sounds like the best fit for you? Let me know in the comments below. Don't forget to like, subscribe, and check out our other videos for more ways to grow your wealth and achieve financial freedom. Thanks for watching.